Okay, so in this video, you'll learn what is the false break setup. So just to illustrate, right, a false break looks like this. Market trades higher, retraces, and then it trades back towards the high, retest the prior high, right? This has to retest the prior high and exceed it, and then get rejected strongly, closing lower. So this is a form of price rejection of the highs, right? It's a false break because the market break out of this high and then closes back in the opposite direction. So it's a false breakout. Alternatively, it can go back towards the low, right? Trigger trade below the lows and then closes higher. This is a false break of the lows because, right, traders who trade the breakdown, right, this is a false breakdown. So you can see that the false break generally is trading beyond the obvious highs and lows, right, and then reversing back in the opposite direction. The reason why this works is that when you are trading, there will be traders who are looking to trade the breakout. So when they trade the breakout, they go long on the break of these highs. Where will they put their stop loss? Chances are they put their stop loss, somewhere within this region, right? From here all the way to here. I have no idea which level exactly, but within this range. So when the market reverse back and hit this cluster of stop loss, the market, or rather it will fuel selling pressure to induce price to continue trading lower. So this is why the false break setup works. So with that said, right, I want to walk you through a few things to take note of when you are trading the false break. Right, as easy as it seems, right, but there are a few important points that I want to highlight out, which I find that it's really important and will improve the odds of you trading this setup. The first thing is you want to have a clean move into support resistance area, right? So as you have learned earlier, a clean move, okay, would have a better odds of, reversing back in the opposite direction. Okay, a clean move into support resistance, and your support resistance are those levels which you have marked out in the earlier lesson where I shared with you how to draw support resistance. You want the best levels, the most obvious levels to trade the false break setup. Second thing is that the price has to take out the prior highs and lows, right? If the market does not trade above the previous high, there is no such thing as a false break. So meaning this one over here, let's say this market comes back here, but it does not retest this high. For example, it reversed from here. This is not a false break because it did not retest this previous high. The third thing is you want to see is a strong price rejection, right? You want to see the price get rejected strongly. So I'm going to share with you a couple of tips on how to define strong price rejection using a line chart and the ATR. And the fourth thing is you can just enter on the next candle open. So let's have a look at a few examples. So for this over here, you can just ignore this green and red line. These are basically trades that I took, right? And where I place my entries and exits. I'll talk about the stop loss placement later on because there are a couple of ways to do it depending on your trading approach. So for now, just focus on identifying the false break. So for this over here, the false break is clearly at this portion over here. It's actually a two candle, right? This candle has retested this prior high. And the next candle, it basically got rejected strongly, closing near the lows. So these two candles, this one and this one, right, combined together is basically a false break setup. So one thing to note is that the false break setup does not mean that it has to be within the same candle. It can take in the form of two candles or even three candles, okay? So this is an example of a false break of the previous high. This one over here is another one. Notice the price came in strongly, a strong clean move into this area of support, and then it got rejected on this candle over here where it basically closes bullishly near the highs over here. So this is another example of a false break. All right, remember the first thing is a clean move into support resistance. Second thing, it has to retest the previous high or low depending whether you're going to go long or short. And the third thing you look for is a strong price rejection. So let's call it R, right? Rejection, a strong price rejection. Okay, so with that said, I want to share this one with you. Okay, it is a valid false break setup, but it's not a good trade. Why is that? Because if you look at this, right, this basically is a false break of these highs. But, okay, you can't see this right now, but when I look back on my trade and I zoom out the charts, this isn't a very strong level to start with. A better level to have this false break setup is either this highs or this one over here. Okay, this is a minor level and it's a level that I would say I usually would pass it, but in this case I took the trade. Okay, but a better trade setup would be to trade off obvious levels, right? Like the very obvious support resistance level on your chart. So with that said, right, let's have a look at a few more examples and to run you through on how to actually define price rejection. So you can see over here, this is a very obvious support level, right? You can see that we have this false break of this area of support. So I know this price rejection is very obvious, but let's say, for example, it's not too obvious to you. So what can you do? So the first option is to use a line chart. Okay, so this one I changed to a line chart. And you can see that this over here becomes much clearer. Now price came in here, took out the prior lows, and then it closes bullishly. So you can see that the candle looks something like this. Right, one thing to note is that the line chart is based on candle close only. So it does not take into account the high and low of the candle. So this one you can see that it's a very strong price rejection. How do you define strong? Is that, to me, anything steeper than 2 o'clock or 4 o'clock, right, it's considered strong. So in this case, since you are looking for long setups, anything steeper than 2 o'clock is considered a strong price rejection. So you want to look at this angle of this line over here and see that it is at 2 o'clock or steeper, right? Because the steeper it is, right, the stronger the price rejection. And just the opposite, right? If you are looking to short, right, then you look at 4 o'clock or steeper, right? So this is one way to define price rejection. So, okay, let me get back the candle. Okay. Another way you can do it is to use the ATR indicator. So let's, for example, I get out the ATR indicator, average true range. Okay, I typically use 20 period, but it's not really going to make much of a difference, right? Let's use 20 period. I typically use the SMA. Okay, so what you'll do at this point in time is that you look at what is the range of this ATR. So this one is about close to 40, right? Let's keep it at 40. So the range of your price rejection, right, has to be 1.5 times the ATR. So it has to be at least 1.5 times the ATR to be considered strong. Okay, so in this case, right, you want to look for the price rejection to be at least 60 pips, right? Because one ATR now is 40. Multiply by 1.5, it gives you 60 pips. So what you'll do is you take this one over here, this high over here, and this low over here, because this 3 candle combined is the price rejection, and determine whether it is at least 60 pips. If this range of this here, from here to here, is at least 60 pips, right, then the price rejection is strong. So clearly from this one over here, I believe it's about 120 pips. So it's definitely, meet the 1.5 time ATR criteria. Okay, so one thing to note is that some of you may wonder, should I use the line chart or should I use the ATR? To be honest, there is really no right or wrong. Okay, if you can't really determine whether the price rejection is strong, then you can use these two techniques that I've shared with you. But if one look at it, you know that it is strong, then you don't have to apply this technique. So moving on, another example, right? Euro New Zealand. This is a very obvious area of support. Okay, and you have this price rejection here. So in this instance, if you were to use the candle, the line, right, it will not be too useful because you can see that the line chart does not take into consideration the wick over here. As I've said, right, you only look at the close. So if you look at the close, right, this is why the line chart isn't very useful in this case. So in this case, what you can do is, again, use the ATR approach, right? Find out what is the ATR value. All right, this value ATR is about 53, 52, right? Multiply by 1.5. So 52 multiplied by 1.5. You get about 78, right? Close to 80 pips, right? Let's keep it at 80 to make things simple. So what you'll do is you take the range of this candle. This is the candle that formed the price rejection. Take the highs and the lows. Calculate what is the range from the high to the low. If it's more than 80 pips, right, then this is a strong price rejection. Okay, so this is how you can go about determining, whether the price rejection is strong or not. Okay, so clearly in this case, this is another false break setup. Let's see. And moving on, another example, this is another false break setup on the S&P 500, right? You can see that price, a very strong move coming in, a very clean move into support. Then you have a strong price rejection. Okay, second thing is that you have a price taking on this previous low. Okay, this is important, right? And the third thing is that you have a strong price rejection closing higher. Okay, so I hope these examples that I've shared with you, right, gives you a good idea into what the false break setup looks like. So with that, let's do a quick recap, right? What is the false break setup? Right, a false break setup is when you have a clean move into support resistance, right? If you have a chop move, right? Okay, so for example, a clean move goes like this, whereas a chop move, let's say it goes up something like, let's say into support, right? It goes in like this, right? This type of choppy move, right? I would usually skip the trade. I only look for a very nice absolute clean move into a level, as what I've shared with you in the earlier examples. The price has to take out the previous high or low depending on your trade direction. Then you want to see a strong price rejection. I shared with you that you can use a line chart, right, to look at either the 2 o'clock or 4 o'clock depending on your trade direction, or the ATR, the average true range indicator, at least 1.5 times the ATR. And then if you have it, right, you can enter on the next candle open. So as of now, right, as I've said, I've not shared with you how to place your stop loss, right, how to exit your trade. I will cover that in the later video. For right now, I just want to focus on the trading setup itself. So with that said, I have come to the end of this video, and I'll see you in the next.